Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A reactionary bearish black crow yesterday, possibly a bearish closing black Maribozo after the previous session's second bullish white soldier. Prices went down to test the bright green lower time, currently at 113.22, of the late February to mid-May bullish Andrews pitchfork, but stopped short of actually testing it directly. This bright green lower time is roughly parallel to the overhead broken but still influential dark blue late February to early May uptrend, currently at 115.04. We are in a fairly quiet area right now between a July 23 high that's below at 112.76 and the overhead June 2020 high at 114.22. However, beyond the June 2020 high, we have the bright red neckline extension currently at 114.62 of the important August to September 2020 head and shoulders top. This bright red neckline extension effectively capped the market back in April, along with the January 2022 high at 114.82 and the February 22 high at 114.95. Finally, as I've said previously and repeatedly, we are now set up with just 5 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'd be on. Anything in between would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. Now, so far today, an interesting follow-on lower to yesterday's action, punching down through the bright green lower time, but as yet not stabilizing below it. Cable, aka sterling against the US dollar. An immediate countering bearish Harami and bearish double combination yesterday, possibly leading to a pipe top, though we'll have to see on that one. This after the previous session's bullish opening white Maribozo and second bullish white soldier. This was also the highest open, close, high and low, this one, since February 2022. The market pulled back lower from trying to push up through the congestion between 134.83 and 136.43. Overhead, we still have the February 22 high at 136.43 and then a fairly free area until the January 2022 high at 137.48. Further down, we still have the interesting purple neckline extension, currently 134.18, of the small but influential mid-November to early December 2024 reverse head and shoulders continuation pattern. Okay, so I have repeatedly asked you to keep an eye on the September 2024 high at 134.34. The reason being, now that prices have exceeded that level, that we are set up for this market to make that rarest of patterns a possible annual key reversal. Now, this pattern has already been set up on Eurodollar. Thus, if we close on Wednesday the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between and we would have a lesser outside year pattern. I am at this stage not even going to contemplate what the results at the end of the year will be, just that we are now set up to achieve one. So far today, a further move lower but halting ahead of the combination of the purple neckline and the September 24 and 2024 as a whole high at 134.36 and pulling back up again. US dollar against the Japanese yen. A very interesting and somewhat unusual key reversal up yesterday after the previous session's reactionary attempted bullish thrusting pattern. The market once again tested lower, but once more balked at testing the August 24 low below, that's at 141.66, and turned higher, this time pushing up through the breached lower trend line, currently at 143.24, of the late April to mid-May ascending expanding wedge pattern, and rising to just under the 50% Fibonacci line of the January 23 to July 24 move at 144.58. Overall, we are still well within the big picture bearish item, which is the bright red July 24 to January 25 bearish Andrews pitchfork, with the bright red upper time above, currently at 145.71, and the middle time well below, currently at 130.42. This pitchfork, though at one point breached and since repaired, has shown and continues to show the bearish angle of attack of this market. Additionally, the other pattern I'd previously pointed out, the whole February to date action, even the whole mid-January to date action of a descending expanding wedge pattern, well, that is still there with a trend line currently at 134.77, the well highlighted early February to late March descending wedge pattern, making up the lower trend line. For the earlier ascending, smaller ascending wedge pattern, I've laid out some targets below just in case. We have a primary nearby target X at 141.95, a harder to achieve secondary target X1 down at 138.35, and a tertiary, much harder to achieve target X2 down at 136.45. These are now under threat and the market reverting higher, but for now, I'll stay with the market reverting higher, but for now, I'll still leave them there on the chart. So far today, a dip lower, but then a push back up over the 50% Fibonacci line at 144.58, though only as far as the short moving average of all things, which is currently at 144.78, before pulling back down lower than yesterday's close right now. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier and a follow-on higher to the previous session's combined indecisive spinning top that was also a bullish harami. It was also a close back up over the bright red lower trendline extension, and that's currently at 718.36 of the late January to late April descending wedge pattern, but still below the dark blue neckline extension, currently 719.80 of the late August to early November 2024 reverse head and shoulders pattern, as well as the congestion formed from the May 2020 high at 719.64 and the 50% Fibonacci line of the September 22 to April 25 move at 719.91. Looking further below, we have little until the Fibonacci congestion in the 714.48 to 714.95 zone. Now, so far today, an immediate follow-on higher to yesterday's action up to the congestion in between 719.64 and 719.91, including the dark blue neckline, but the market immediately rejected the move up and we're back down, sitting just above the bright red lower trendline extension. US dollar against the Brazilian real. A fifth countering bearish double yesterday after the previous session's fourth countering bullish harami. This all continues to come at a crucial time as the market had earlier thrice pierced the key 560 even level, as well as the shallow bright red lower time currently at 564.49 of the mid-August 24 to early April 25 bullish shift pitchfork. Yesterday the market closed right on him. We still have the recently finessed purple May 24 to date uptrend below, which is currently at 560.02. Though I need to reiterate that I don't think these, apart from say the 560 level, may be that good as supports, and it wouldn't surprise me to see them being tested again and soon. Add to all this, we have mixing with the market the once significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Finally, please bear in mind that we have a monthly key reversal down here for April, and all things should be seen in the shadow of this pattern. US dollar against the Mexican peso. A second indecisive pattern yesterday, this time an indecisive doji cross after the previous session's indecisive spinning top pattern. However, it was also a key reversal up, if a somewhat unusual one. It was nevertheless, once more, the lowest low since early October last year. Now, the market continues to make its way lower after a hiatus over late April to early May, exiting the support that is now resistance between 1940.68 to 1936.27, and instead testing the next support zone below between 1915.03 to 1920.38, made up from the 50% Fibonacci line November 20, April 24 move, and the March 2020 low, respectively. This is all still an overall follow-on lower from the overhead very wide congestion band that eventually became a rectangle top pattern and is centered on the September 22 high at 2057.65 and stretching roughly between 2017.20 up to around the 2083 area. It's also worth bearing in mind that April became a monthly key reversal down. So far today, a small follow on higher, but still within yesterday's range and midway between the overhead congestion between 1936.27 to 1940.68 and the support zone below between 15.03 to 19.20.38.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.